They do have the pricing power, and it's for a couple of reasons. One is just because they're a great company, they invest in the product, it's a good product, and they have a leading position. But two is just their end markets have been very depressed the past few years, so people need equipment, they need it to do the jobs they're trying to do, and so there is good pricing power out there.
So are you raising your estimates for their earnings this year, as some have?
So we haven't published our updated model, but yeah, I mean, they guided to a little bit above the prior guide. They raised estimates by 7% or so, and there's underlying strength that we've been calling out for the past year in both replacement demand and growth.
Rob, okay, pricing power is one thing, but when you have the situation, it's almost like a perfect storm here for them. They're having to raise prices at a time when the farmers are suffering because of the tariffs, and they're worried about their own businesses. So wouldn't demand go down just when they're raising price? I mean, it doesn't make a whole lot of sense right now economically, does it?
Well, okay, so fair enough. But I think that the key thing to think about is a lot of CAT's end markets have not had tremendous strength over the past few years, and they need to see some reinvestment. That's true in mining, that's true in oil and gas, and that's even true in U.S. construction. Tariffs do have a cost impact on folks. I mean, you have a little bit of an inflationary push into the economy. That's fair, but overall, I think that CAT's selling into strengthening markets, with customers that have good demand, so they can afford it.
It's just so interesting, Rob, that they quantified the tariff impact for us with a fairly fine point, $100 million to $200 million, and then still raise that forecast going forward. I know we've kind of been circling the drain on this, but I mean, do you have confidence that they can indeed meet this now higher guidance, even with the idea that they're going to have to raise prices?
Yeah, CAT's execution has been extraordinary, really. So if you look at the last quarter, they had the highest incremental margins. So they got the most margin on the extra revenues of anybody in the group, and they had the highest revenue growth. And that looks like it's going to continue this quarter. So they have mostly depressed end markets. Some of them are coming up towards normal, and they have the capacity to do it, and their production system's ticking along. So they've done very, very well.
The stock is 143 right now. Where do you see it going?
So we have a 2-year price target of 208, and the key thing to keep in mind is we think that their end markets have been very depressed, have a long way of recovery to come, and usually after a long period of depressed end markets, you get a little of excess growth. So we're still waiting to see that, but it's coming through so far.